All right. Hello, everyone, if there's anyone here. And it looks like there's no one here yet, if anyone is coming. Guess we'll just wait a few minutes, see if anyone shows up. This thing automatically makes recordings of the stream anyway, so I guess I'll leave it on the YouTube channel for someone to watch. Maybe I'll come up with some good information to go over or something like that. But we'll wait a couple minutes, see if anyone shows up. Hey Matt, how you doing? Good to have you. Glad you stopped by. We're just gonna wait a few minutes, see if anyone else shows up. And if it's just me and you, it'll just be me and you. It'll be a shorter stream, but we can kind of knock out anything you want to look at. So. While I was sitting here waiting to get ready for the video, also let me know, Matt, can you hear me pretty good? You never really know if the sound's working. I have some headphones on, but I don't know if the sound's working. Cool, good to know. Thank you. Okay, well, we can go ahead and get started. Just me and you right now. Maybe some others will fall in. If not, that's no problem. Uh, okay, louder. See if I can move closer to the mic. Is this any better? Okay, cool. Okay, Matt, so right now it's just me and you, so let's go ahead and do it. What chart did you want to take a look at? Just toss me the symbol in the chat and I'll see if I can pull it up. A and D. All right. I love it when you give me charts that I don't follow because it makes it easier for me to do it from scratch. If you're looking at the screen, which one is it? A and D International? Oh, AMD. Okay. Oh, I do follow that one. So I'm probably already gonna have lines on it. So I will. But this is the naked chart. So. All right, so this is the weekly chart for AMD. I already have updated lines on my charts, so let's go to my charts. Let's get out of my trades here. Okay. Now you have to be a little bit careful because we're in earnings, and you take a look at this rocket ship that we had today. But let's back up to a monthly chart. All right, so here's what's going on with AMD. We had you can consider this parabolic, this move here that started. What is this on? In April of last year. So you ran up all the way through September, made a new all-time high. Well, not an all-time high, but a new high since April of 06. All right, so it's the highest it's been in 12 years, right? So you've got a high, and we've come down from that. Now, I use time to mark trend lines, so I like to check the polarity on a section-by-section level. So just like everything else in the market, it seems recently, the polarity has changed to down because we made a really big move down. AMD is a little different because you had a polarity change here, because I mean this trend didn't hold up. It pierced and went beneath it, but it quickly turned around and went the other way. And this month isn't closed out yet, but it will be tomorrow. And what you have now is a break going the other direction. And whenever I see this, this is probably the most probable trade setup you could take. Now, I'm not going to give advice on what to do on this particular stock, but if you look at what you have here, the trend line broke to the downside first, and then on the next candle is going to break to the upside, assuming tomorrow doesn't close above the high of this candle. Because if it does, then you couldn't use this as a swing high. But assuming that the market closes below this high tomorrow, today is the 30th, right? Yeah, so you've got one more day in the month. So assuming that this is going to break this trend line, you're going to get what I would call a double cross. And what that is when you break to the downside, and then on the next candle you break to the upside. That's an extremely bullish pattern, extremely bullish. Like, I love that trade. You get it very rarely, but I love that trade. And then you add on top of that, that the move that started last year, that when we came down, look at where we turned. This is typically going to be your buy area. So you're going to turn on the 61% most of the time. Between 61 and 78 is typically the buy area. So it's been down there. It's tested it, it's been down there once, tested it again, and then you get a double cross to the upside. I think AMD is going straight up. And this is probably a long-term continuation. I don't know if you're going to get new highs. I mean, obviously you're going to meet resistance up here somewhere, because there's always contrarian traders that don't believe that it should make a new high, and there's going to be selling pressure here. But over the next, I don't know, period of time, I'd be looking for a buy on this deal here. And then as you drop down to a weekly chart, I mean, same thing here. Time to mark trend lines are my favorite tool other than Fibonacci. I like to trade with clean charts. So polarity up, bouncing off of 61, double cross, up on a monthly chart, up on a weekly chart. I think this thing's going to go up. So that's my opinion on AMD. And that double cross is a super consistent pattern. I have 10 different trade types, and it's the only trade confirmation that I use, and they work on all time frames. Double crosses where it breaks a trend line down and then breaks it going up, or vice versa, breaks it going down up and then breaks it going down. When you trade in the direction of the second break, I mean, that thing, daily chart, hourly chart, weekly chart, it's extremely consistent, extremely consistent. So now I have strategies. I like to buy pullbacks. I like deep retracements, because with deep retracements, when the market pulls back, your stop loss gets smaller, and then the market only has to move in your direction a smaller portion to get 2-to-1 risk reward ratio. But the problem with buying deep pullbacks is you're typically buying opposite of what the market is doing. Like if you want to sell at let me see if I can find a chart to give you an example. But if you want to sell, you're actually talking to me here. Let me take a look. If I'm looking for, where would you place my stop? All right. I don't want to get in too much into guiding you on exactly how to trade it. Not necessarily because I don't want to help you, but I don't want to be irresponsible. But for example, weekly resistance. So if I'm going to trade this, and let's say I'm looking at it intraday. All right, so we broke above it here. The swing low that caused the pressure to break the trend started down here. So I already have blue lines. My support lines, where they are now, is where I would buy if this was me trading this. So I know you're looking at this, you're like, man, that's, it's nowhere near there. This is where patience comes in. You can buy here. The problem is we were in a this is monthly resistance. We don't know that it's going to go up here and break this level. We're in an overall bearish market. Semiconductors aren't doing terribly well, and you could get a reversal here. You know, and this is the portion of the market that gives you the opportunity to buy it down here. So I don't buy in sell zones, and I think it's in a sell zone still. Now, the polarity can change, but you still can be going the opposite direction. All right, so and as far as stops, typically you're going to be right or you're going to be wrong. So if I'm a buyer here, I would put my stop somewhere behind here, because that would somewhat invalidate my trade if it did something different. You see, because this is the low that the market's that it's seen, and it's not come down below here. So if it comes back this way and I enter my trade somewhere in this area, my expectancy is it's going to stop before it gets here. And I mean, how many ticks behind it? Don't beat yourself up too much about how far behind this swing low should you put your stop, because if you trade enough, it's going to take your stop out and it's going to miss by 1 or 2 cents no matter what you do. You put it right dead even, it's going to get you out by 1 cent. You put it a whole, you know, I don't know, what is it? This stock is a small volume, small price stock. So let's say you put it 10 cents back, it's going to stop you out at 11 cents. So it's going to give you a different, it's going to give you a different kind of, you're going to get stopped out on every different type of way. So don't overthink the stop. Put it back behind here. That would invalidate the setup, and then see what happens. I'll show you a trade that I'm in right now. I'm in NVIDIA right now. I thought I missed it earlier this week. Oh man, I didn't mean to do that. I thought I missed it because I wasn't in front of the computer, but the market the next day came back to the same spot and it didn't invalidate. So I jumped in, and I see you on the chat there, Justin. Good to see you, brother. So, all right. So this gapped on bad news. So here's my support for the week. This is not too different than what you're looking at. Now, the biggest difference is on AMD, you're bouncing off monthly resistance, okay? And the overall trend direction on a weekly level is down. So you have more downward pressure than NVIDIA is dealing with. But this NVIDIA stock is a similar setup. So basically, price was running up. They got really, really bad news. The price gapped all the way down. I think they lost 14% in one day. That didn't dissuade me because, you know, after watching the market, these things are cyclical and this is a high probability area. So I'm a buyer down here at 132. Now, I wasn't available to trade it that day, but the next day, look what happened. Price came right back down there and tested the low. I jumped in. So here's the trade. I got in at 131.87, right? And it's so far it's into profit. Here's my take profit. You know, this is where I'm getting out. Here's what's cool about my exit. Giving y'all all my secrets. Here's the thing. If I'm wrong about this trade, most of the sellers are going to be around here to jump back in. Look where my exit is. I'm getting out before this. And because I bought a retracement that was so deep, the distance from where I got in to here is 2-to-1 risk reward. So I can get 2-to-1 risk reward before I get to the area where normally I'm going to find out if I'm wrong about the trade. Now, I could be completely right, because if you look at NVIDIA's chart, the monthly resistance is all the way up here. So in theory, and if you look at this, is kind of like a head and shoulders pattern forming. You know, it's easy to see them after, but you got to get good at recognizing them real time. So if you look at this, it's like a head and shoulders pattern. There's your shoulder, there's your head, here's your shoulder. It comes up, breaks this neckline. Chances are price is going to come all the way back up to here. So you would think, man, let your profit run. But my strategy is more or less, I don't try and predict the market. I don't try and be right. I want to get out high probability. It's a good probability to buy here, and it's a low probability that there's going to be a continuation here. So I play in between those zones, and 2-to-1 risk reward is fine by me. And if you do that consistently enough, you'll make good money. And so when we look at AMD's chart, I don't look at that as being too different, because if I was to impose the weekly, I already did it. If I impose the weekly trend lines on there, if you get a bounce here back to the downside, this is the safest place to buy, to look for a buy. Now, it doesn't mean buy it naked, like it hits this area and you just buy it. I mean, you could do that and put your stop back here, and I'd say you have a 60% odds that you're probably going to win that trade depending on what your exit is. Now, if you're aiming for all the way up here, I don't know what's going to happen for you, but if you were looking for a modest 1.5 to risk ratio, you'd probably get it 60% of the time. But buying up here is kind of, I don't break out trade, so I probably couldn't give you really good advice, but I wait for a pullback if I was going to try and trade it. Yeah, NVIDIA definitely does move. Definitely. Yami Humhe. That's a great name. Do you have anything, any charts you want to pull up? And hopefully, Matt, I helped you out if that, with that. But that's my analysis on AMD. I mean, I'm watching AMD. It's on my list. And I don't have these blue symbols. These are all the trades that I'm in. Actually, I'm not in the McDonald's trade anymore and here's an example. Here's my entry, 205 stop, my number of shares. There's the red arrow for my entry on a sell. Almost got it to the tick. 87.61. The high was 87.79. And the exit was somewhere down here. So I need to take this one off. I've actually already updated my trade journal for it. So I have 3 open positions. These 3 here in the video is one of them. So, yeah, that's pretty much what it is. That's AMD's chart. Looks very similar to NVIDIA to me. And the biggest difference is you've already reached monthly resistance. So I'd be very careful there. And I'm of the opinion, I think the S&P is giving us somewhat of a bull trap right now. I think we're going to break out to the upside. There's just so much overhead resistance, and I think it's going to catch up a lot of people going long, and then it's going to pull the rug out. That's what I think. So, okay, Yami Humhe, anything? Okay, well, doesn't look like we have too much going on here. Did you have any other charts that you want to look at, Matt? I mean, you've got the floor. It's all you right now. Okay, let's take a look. Pro shares. Okay, yeah, typically, I used to watch this, but I don't because it seems to, this is basically shorting NASDAQ 100 is the exact opposite. So there's almost 100% correlation. So basically it's the exact opposite of QQQ. But it's just like, well, maybe not exact opposite because QQQ is at the, all right, let's do the analysis. Let's break it down. And I'm thinking SQQ, but let's break it down. All right, so monthly level, obvious trajectory was down. We had a polarity change to the upside here. We have retraced back after making a high over 60%, which puts us in a sell zone. I mean, I'm sorry, in a buy zone. Oops, wrong button. Hold on here. All right. So again, not trying to guide you, but this particular one, based on a monthly level, is in a buy zone. The weekly direction is up. And you're looking at the chart and you're like, well, how do you get that from this? Well, hold on one second. No, I'm wrong. The weekly direction is down. But we're in a buy zone of a monthly chart. Levels trump direction, and they also trump momentum, right? So it's kind of like the unstoppable force against the immovable object. Think about it like this. High-end traders, high-frequency traders, institutional traders, all the guys with the big money that really move the market, they're moving so much money, they cannot enter their positions all in one time, right? And they're using a lot of fundamental analysis. They care about the trade wars with China. They care about, the P&Es, the profit margins of the company, its place within the sector. All those things matter if you're a fundamentalist. And large money players are fundamentalists because they have to scale into their positions over time. So they're not entering day trades on a 2-minute chart like the retailers are, just to move the market left and right. They don't really, that's a lot of noise to them, you know. And that's how, like how Buffett will tell you he evaluates a company and see what the total value would be to buy the entire company, and then when they feel that the stock is undervalued, they buy it. So they're not really chasing these levels. And the point of me telling you this is that dictates the fundamentals of how the market works. So whatever was the force behind the decision in the market to push the market up, there's going to be people there to protect that position and scale back into the next leg of that position in these zones, right? So for the market to get to that zone, it's the same thing we just discussed about AMD. For price to get there, you're going to have a rejection to send it back to that buy zone, right? Well, this is the same thing. The polarity is down, right? But zones trump that. So a monthly support area trumps the momentum, and it trumps the zone, the polarity of a weekly direction, right? So this is the area, if you're a buyer, to buy. If you're a buyer, this is the area. And what you'll typically see is some type of reaction either way. Turn the magnet on. So what happened here is most of the time, you know, the candle bodies are going to start getting smaller because there's less sellers here, and there are more buyers. So that the balance of buyers and sellers start to kind of get out of whack here, and you're going to get a reaction. And sometimes, you know, it's going to go all the way up, but, you know, there's going to be contrarian traders that, you know, at 61% are going to sell it back down. But then you've got the buyers that are going to buy it back up. And if the long-term direction of the market is supposed to go up, you're going to get typically it's going to do one of those moves. So now, you know, don't try and predict this, because each week and each day is going to give you more information as to whether or not that's how it's going to play out. But in this area, the safest play is some type of a buy. I wouldn't sell here. There's support here. The market's already proved here that it wouldn't go lower than that. It proved here it wouldn't go over there. And that's 61 to 80% retracement of the overall up move that started back in October. So if I had to break it down, this is a buy zone, just like on QQQ and SPY and all those, you're in a sell zone. It's basically the exact opposite, going the other direction. Yeah, if you're a buyer at these levels, I would be the person to agree with you. The disclaimer is I'm not giving investing advice. I'm just giving my opinion on the chart, but I would tend to agree with you. Now, and how you get into the trades and what your triggers are and how you trade that on a daily, hourly, 15-minute, 5-minute chart, you know, that's, everybody has their own way to get in, but definitely. And you could just look at what's happened since we got to the zone. Look how small the bodies have gotten, and, you know, and it's squeezing. And I think, and I mean, this is basically the exact opposite of the of QQQ. So I mean, what you have here is a channel that's been forming, you know, and the price doesn't know what it wants to do. You know, here it broke out to the upside, now it's broke out to the downside. But the one solid, or in a longer term, bigger picture, there should be more buyers in this market at this point than there are sellers. And I think we may get a little trickery to make people think it's going to go further down. And as soon as you jump in, it's going to pull the rug from underneath you and it'll shoot right up. And, you know, most of the time when you get consolidation like this, the price explosion out of it is very, very strong. So you find out if you're wrong really, really quick. So awesome. Well, I'm glad we agree. And yeah. Quick question, since you're on the channel and no one else is, have you been following me since we did the cryptocurrency stuff, or did you come across some of the stock things and started looking then? Just a question. I'm just curious. Okay, cool. Cool. Yeah, I'm still a cryptocurrency fan. I still believe in Bitcoin. To be perfectly honest, what I think is going to happen with crypto is when we have our downturn, it's coming. I mean, we've got global slowing everywhere. We don't have anywhere to go with our interest rates. we're in a very precarious and scary spot when the market does finally downturn, with the heightened debt, the political uncertainty, the interest rate so low that we don't have a lot of places to go to stimulate the economy back. Like, we're in a tough spot, and when that happens, it's going to be, I'm not going to say catastrophic, because it's not based in housing and it's not based in, it's just going to be, I think it's going to be more of a normal depression. But when it happens, people have gotten used to really high gains, and all it's going to take is a small fuse to get lit under Bitcoin. There's going to be a lot of people that are going to move their money. Typically, they flee to cash, they flee to gold, and they flee to, like, some of your blue chip stocks like Johnson & Johnson and McDonald's and places like that. But I think a lot of money is going to pour into Bitcoin, and all Bitcoin needs, as it's proved 4 times now, is a small little ignition, and the mania will start all over again, and every time it's stronger than it was the time before it. So I think it's cyclical, and it's going to come back around, and we're going to see a $20,000, $30,000 Bitcoin again, so, and what's crazy about that is then all of those trading platforms, we have very short memories, and all the trading platforms and bad actors and everything else that we went through the first time, a different variation of all that stuff will pop up all over again. But, fool me once, right? So I'm not going to take that bait anymore. But, yeah, I think Bitcoin is going to have its day in the sun. I'm holding some, and hopefully it's going to be profitable sometime. So, yeah, it's coming. But, okay, well, I mean, we've been live for 28 minutes now, and it's been pretty pedestrian. Just me and you and Yami Huhe. So if you don't have anything else, okay, I can hold for a couple moments. I wish we had more people in the chat, because as I was sitting here and looking at SPY, and I know you're not here, Dave, but I'm talking because this is recording anyway. I don't want the people watching the video to get bored to death. But when I was looking at SPY earlier, I noticed a lot of similarities. I went back on the chart to find somewhere on the chart where it looked like it does now, and it was pretty ironic what I found. But you know what? I'll save that for the weekend review that I know more people will watch, because I don't want to do it. I don't want to talk about it multiple times. So I'll save that information for then. So now we'll just go over any charts anybody has, and if there's nothing left, then we'll just go ahead and end the stream. But Matt, I'm holding for you for another minute or so, and then we'll see. Quit. Let me see. I think it's SQQ. Yeah, same exact chart. Oh, Tesla. Yeah, Tesla's crazy. But you know what? I've made some money on Tesla. Tesla's not the worst thing. I mean, look at so if you take a look at, these are my charts that I trade off of. So this gives you a picture of what I was thinking. So I was short here. I wasn't in a trade because I didn't get the setup that I was looking for, and it was awfully close to earnings, I believe. So I didn't take any trades, and then of course we got the gap. Now, right now, the market direction is to the upside. Let's back out and take a look at the weekly chart, because I don't think the monthly chart's going to change any. Yeah, I think resistance is still in play on the monthly chart going into next month. So that's that zone's gonna kind of stay there. So on a weekly level, I've got a downward polarity on it. These blue lines represent where sellers are, and actually it coincides with the bounce off of the monthly resistance. So I'd probably be looking for some type of a sell setup up in this zone here. Let's go to the daily. So up here in this blue area, I'd be looking for a sell. One of my trades that I like to do is if I get a pullback like early on in the move, I know there's going to be a lot of sellers here and there's going to be more sellers here. But if you get a pullback early in the move, I'll buy the counter trend dip. But I like deep pullbacks with a small stop. And you know, when you trade like that, you're buying as the market's falling straight down. It's the scariest thing. But this is how I've been trading for 10 years. So I do it. And when you're wrong, you find out really fast. Price doesn't stop. It just comes out, takes you out. And then, you know, you lost the trade. That's why you have to use good money management. But the only trades I would like here, I don't like to trade in the middle of zones because it's very unpredictable. Trend line breaks inside middle of the zones fail all the time. It's like you can't trust price at all until it gets into a decision area, which I deem as, you know, the support or resistance on the chart from a weekly or monthly level. So if you got a pullback and it came down because it hasn't got to the sell zone, I'd probably risk the buy down here because it's come pretty far up. And so typically those things hold. And at minimum, you'll get a nice bounce that you can get a 2-to-1 risk reward and get out even if you're wrong. Otherwise, I'm waiting until it gets up here and then I'm looking for a sell signal on Tesla. So, and this is why I watch so many stocks. You know, this is my watch list. And the ones with labels next to them have done something. Red means it's past the level and I put the order in. Yellow means I'm watching it. Polarities change. Blue means I'm in the trade, like NVIDIA. But, you know, I have all these other stocks and I comb through these stocks every single day. And the thing about it is, you know, it takes a while to find setups. And I have 10 different trade setups that I trade consistently. And it still takes me, you know, I go days without trades, you know, because you want to make sure. I don't want to get antsy and start trading in the middle of the range because it's just very unpredictable. And you just don't win. Historically, I've done it. It's just not a smart thing to do. You want to wait till it gets in, like these resistance areas. They don't necessarily mean price is going to move there, but you can do it if then. Like when price gets there, if it does this, I do this, and if it does that, I do that. But at least it's more objective. You know, in the middle of the range, likely anything's likely to happen. So I like to buy and sell at tops and bottoms of ranges. And I pick my decision based on the polarity of the market and then what kind of setup I get and then which trade type I'm using. So on this one, I'd be looking for a sell up here. And if I got a buy trigger, I'd just wait until it pushed up, made a new high. Polarity would change. Then I'd be a buyer anyway. My zone would be here. I might play the retracement on the back test, and then I'd be a buyer at the bottom. That's how I trade. So here, I'm looking for a sell in this zone when it comes back. And if it doesn't set up, you know, you look for something else. Well, time to mark trend lines. Okay, so yeah, let's do a quick time to mark deal. That'll probably be easiest on a monthly chart. So let's go to SPY real quick. And time to mark trend lines. Once you figure them out, I mean, just send me a check for 10% of whatever you make in the market over the next 36 months, and I think that'll cover it for blessing you with this time to mark knowledge. And you can look up time to mark analytics. They do all types of special timing tools. Even today, like, you know, they call the top and bottom with like 90% accuracy. The dude's a genius, and no one watches him. I don't think. You go to the YouTube videos and no one looks him up. I have a sneaky suspicion that almost 80 or 90% of the people like that are online claiming to be traders, and I can show you these strategies and all this kind of stuff. I don't think almost any of them are traders. You know, they're selling something that they're getting from a signal service, or they're not real traders. Because if you did, you would have more tools. Anyway, I digress. So time to mark trend lines. All right. So what time to mark trend lines is you're looking, let's pick a spot. Let's pick a spot on this thing where I'm going to draw a trend line. All right, so we're going to, oops, I didn't mean to do horizontal. Let's look at this section right here to this section right here. All right, so in between these two lines, we're going to look at these and we're going to do some time to mark trend lines. All right, so the way time to mark defines the lines. So let's start with this one right here. So here's a swing low. All right, so let's fast forward a little bit. Let's not pay attention to this swing low, even though we're starting here. So when we get to this swing low right here, what time to mark says is to get the angle of the market, you go to this swing low, Now find the previous swing low that's lower than this one. You're only dealing with 2 points at any one time. So you put your cursor, you put one end of the line there, and you put the other one there, and you project it out into the future. Now look at that. It gives you an angle, and there's your price. But here's where time to mark trend lines are powerful. Once we got to this point right here where this little red candle is, the trend line changed because it's completely objective. It's this swing. Okay, so when we get to this red line, this was the most recent swing low, and here's the one lower than it that was prior to it. You see? So the angle of the trend line is always changing with the price at all times. It's completely 100% dynamic. And these different angle changes are telling you the velocity at which the market is moving. Now, why is that important? Well, it's important because if the market breaks through the trend line, it's telling you that it's the upward momentum and the overall buying and selling, basically pattern that was going on is no longer active. All right, so we've been making them. So here's the next one, and here's this one. All right, so here's the last one before price punched through the trend line. Okay, now what this tells me, remember when it was down here, it was more steep. Then it got here, it got a little bit more steep. Then it went here and it got a little more broad. Then it came here and it was a little bit steep again, and then we punched all the way through it. Now what this tells me is the very first time price comes and does a retest, there are going to be sellers there because there's first touch. Man, I'm giving you all my secrets. First touch is a very, very, very important thing in trading. The first time price comes to a reaction zone, it's very predictable, very predictable. So when this price punched through here and went down, you know that there's a large percentage of the market that if the price retraces back up, that are going to be there to sell it. Now, you don't know how strong the selling pressure is going to be. Like in this case, price never made a new low. But because price broke through there, what you could do is say, okay, my polarity is down. I'm thinking down. I'm looking for a down move, even though you're in an up market. And the very first time price comes into the sell zone, as we call it. Okay, so let's draw some lines on here. I know this is getting confusing. We've got 100 lines, and I just moved my monthly level, but that's okay. All right, so let's get rid of these blue lines down here. We don't need those anymore. All right. So the first time price comes into this zone, there's going to be a reaction. That does not mean it's going to push all the way down and make a new low, but I don't know what the probability is. If you go through this chart and draw your trend lines and watch where the trend lines break, you're going to find that the market goes in the direction of the break on first retests. I don't know, 80-90% of the time. It's not objective 100%, but it's pretty consistent. And so it puts the odds on your side. You're looking for a sell in this zone, and then this is what you get. Now here's some magic. Man, I can't give you all my secrets today. Matt, I can't give you everything. But just pro tip, all right? The further back the market retraces, let's say you're going to try and sell at a 78% retracement. All right, your stop loss is $8 right there, right? If you sold at this 61% retracement, my mouse is too sensitive. To get your stop back there, it's $14. Now, here's the problem with that. It's not so much about if you were aiming for 2-to-1 risk reward with $14, that means it's got to come down $28. You are now betting by taking that trade at that level that price is going to come and make a new low. Okay? Me, as a trader, I'm scared to be wrong. It's very, very easy to be wrong in trading. And I know for a fact, and I hope, just let me know if this is getting too confusing, but I know for a fact that if the market's direction is really up, that my retracement back that I sold, there's going to be buyers here to buy it back up. And what if I'm wrong about the direction going down? So how do I prevent I could get into this trade right here with a $14 stop loss, you know, back here, and I'm aiming for $28, which is down here. So this market's going to come down here, and if it was really supposed to be up, I'm going to find out in this zone here, it's going to reverse on me, and I'm either going to lose this trade or I'm going to be at break even. And if I took all these trades at this level, I would need to be right a lot to not get stopped out or break even. However, if I sold it back here with my $8 stop, and I need to get out at $16, look at where I can get out of the trade. See what I'm saying, Matt? I can be wrong about the direction, but still win my trade with a 2-to-1 risk-reward ratio. It's powerful, powerful, powerful stuff. And what happens is the trend lines help you determine things. So right here, if we're looking at the swing high, time to mark. There's the trend. Okay, then price changed here. You know, the angle changed. There's your break going up. And now we were already down on this move, and then we started going up. Started going up. Price broke through it. Our polarity is still down. And you want to see something that's cool? So then let's say we stuck the fib on that one. Look where price reacted. Hit the 61, pushed it back down. But this is where time in the market definitely is on your side. I mean, if you're paying attention to this, what you're getting is price reached that level, went down to make a new low, failed to do so. Came back up on the retest. You know, let's say you sold it again, your second position. Made a lower low. I mean, a higher low, so it's definitely not coming down to break this low. Then you got your trend line break here. All that tells you is this market's going back up. You know, so it's not just, you know, the trend lines or just the levels. You got to put, there's some common sense, and you have to watch price. But price is telling you everything you need to know here. And the reality is this move here, you see where price stopped, is a 61.80, because the overall direction of this market is up. So this zone right here was a buy zone, but this is a weekly chart. You want to know something pretty cool? On the monthly chart, I bet the monthly chart support levels were right here. So if you're on a weekly chart, you don't see them. But that's why I go to a monthly chart, because if I go to the monthly chart, I can't see the candle. The thing's in the way. Well, maybe not. That was a small pullback, because on a monthly chart, that was about a 38% pullback. So you would have got failure here. I mean, your main resistance is down here, and this is what I kind of wanted to show, because this is very similar to 2008. But I'm gonna go over that on my next video that I do. Maybe the week wrap. I'm gonna get into SPY. We're gonna go back to 2008 and take a look. But yeah, I mean, that's how the trend lines work. They're only using the most recent swing high and swing low. You know, and you can draw both, and you'll see what's going on. Like, you know, right here was the one up, and it broke through. All right, and here's at any point. So on this candle here, that was the one there. But the last trend line break we had was to the downside, and that's this one right here that we're looking at. And the current time to mark supply line is this one. So we're still in a downward trend. And actually, no, wait a minute. Is that a swing high? 98. Yeah, that's actually a swing high. So we had a break to the upside on a weekly chart. But all of this resistance is just, you know, we'll see. I think there's going to be a lot of buyers sucked into this thing, and then I think it's going to tank. It's my opinion. but we'll see. So, okay. I mean, the best thing to do is get the chart out. The lines are cleaner on monthly and weekly charts because there's not as much noise. So if you're going to practice doing time to mark lines, that'd be the best way to do it, is go to monthly and weekly charts and just practice drawing them. The last 2 data points. All right. And they're extremely helpful. I mean, I couldn't express to you how important they are in practice, especially over time. You'll have an aha moment the more you use them. And, you know, just let me know when you have an aha moment. It'll be good. So, all right, I think I'm going to go ahead and wrap this up. Matt, it was cool having you on the stream. I appreciate you stopping by. Anybody that watches the stream later on the recording, hopefully they'll glean something from it. And I'll announce when I'm going live again next week on Twitter. And there should be a weekend wrap-up video on Saturday, I think. So stay tuned for that, and I'll show some commonality between the 2008 chart and the SPY chart for now. So have a wonderful evening, and I will talk to you soon. Have a good night.